Trump's new tariff proposal will impose China of about 150 billion USD on their exports as tax to the United States. This tariff will very likely crash China's economy because the US is China's top trading partner. According to the world's top exports, in 2017, China exported 431.7 billion USD to the US alone, contributing to 19% of China's net exports. This trade war will drastically dwindle China's GDP, forcing them to take measures like reducing imports from other countries, increasing prices of exports, reducing foreign investments. The impacts of the trade war aren't limited to the participating countries either. For example, as one of China's biggest trading partners, Australia is reliant on them economically through imports, exports, tourism, and investments. According to the Australian Trade and Investment Commission, in 2016 to 2017, 110 billion Australian dollars, about 35% of Australia's exports, go to China alone. If China becomes poorer, they'll do less trading and investment with Australia. The land down under can no longer export to China at the same volume and pricing, hence they'll have to lower commodity prices, export to China less, or do a combination of both, which will either way greatly impact Australia's exports level significantly, causing its economy to crash along with China's. On the other hand, Japan has been enjoying economic growth for the past 10 years. Levels of unemployment has been going down and wages has been going up. With increased consumer spending and corporate investment, Japan is experiencing domestic growth. According to Sputnik News, Abe's fiscal policies to lower taxes and deregulations are responsible for Japan's recent improvements in the national economy. Strong domestic economy allows Japan to not crumble economically if unfavorable changes were to occur in international trades. To summarize, Trump's tariff on China will likely cause Australia to experience an economic downturn. Japan will likely maintain its economic growth because they have strong domestic economy that is booming thanks to Abe's fiscal policies and diplomacies. My forecast for the next 3 months is if Trump's tariffs are imposed, Australian dollar will depreciate against the Japanese yen. The United States inflation rate is historically unstable, fluctuating between 1.5% to 2.75%, as compared to the UK, which has maintained a steady inflation rate of 2.75%. This demonstrates that the UK imports more than the US, meaning that the UK demand more foreign currencies to purchase imports as compared to the US. In addition, the UK's products are demanded less from overseas as compared to the US, implying that foreign nations demand more of the US dollar than the British pound. In terms of real interest rates, if nominal interest rate is high due to high real interest rate, then it will stimulate capital inflow and appreciate the currency. The UK's nominal interest rate is 0.5% and inflation rate is 2.5%, meaning that they have a real interest rate of a negative 2%. The US nominal interest rate is 2.25% and their inflation rate is 2.4%, giving us a negative 1.5% in real interest rates. The US nominal interest rate is significantly higher than the UK. Because of this high real interest rate, the US has more capital inflow and appreciation in the US dollar. Hence, the GBP will depreciate against the USD. When comparing cash rates, it can be seen that the GBP is depreciated against the US dollar. The current cash rate in the UK is 2.25%, which is increased by 2% since the last rate. Since UK's bank decided to maintain its cash rate, there is no change in the value of GBP. However, the US cash rate was increased by 2%. Therefore, it stimulates capital inflow by increasing demand for the US dollar, as well as prevents capital outflow and decreased supply of the US dollar. The net effect is an appreciation in the US dollar. As a result, GBP will depreciate against the US dollar. To summarize, the UK imports more and exports less than the US, resulting in higher demand for foreign currencies for the UK. The US has a higher cash rate than the UK, which is more appealing for foreign investors, resulting in higher demand of the US dollar over GBP from the rest of the world. Lastly, the US has a higher real interest rates than the UK. These three factors supports my prediction that the US dollar will appreciate against the British pound.